Guys, I wish you all a very happy new year. However, this new year is not expected to be good for the market because in the global stock markets there will be a correction. So we can anticipate 25% to 30% in different indices in different markets. However, the question on recession is always subjective, and through the numbers and the levels it is very easy to find out whether this correction will turn into a recession or not. So I'll make a different video dedicated to the correction and recession, and I will discuss the recession cycle, the correction cycle, when it will go down, when there will be a retrace, when there will be the revival of the bullish trend, everything in detail. For now, here I will do the S&P 500 technical analysis for the week of January 6th. What you can see here is that S&P 500 is struggling to sustain and not to enter into the bearish trend. However, now everything is bearish. There is a confirmed crossover in the moving averages. But until it trades, until it closes below the Ichimoku cloud, it will not be considered as an absolute bearish. However, because of this, because of this good bullish movement on Friday, on January 3rd, there is a little hope. There is a little hope that the S&P 500 can revive. But that revival in the S&P 500 to the bullish trend, or the revival of the bullish trend, will not work unless the Dow Jones also comes into the same condition, because for now the Dow Jones is 100% absolute bearish on the daily charts, and any revival, any retrace in the Dow Jones will be limited to the cloud itself. And also I want to show you that S&P 500 is again and again is trying to sustain at this zone. This zone is very heavy zone. Historically, it has helped the S&P 500, and if you have subscribed to my YouTube channel for last many weeks, months or years, then again and again when it was in the bullish trend, I have mentioned that it will face trouble, it will come down. And only when it managed to clear the zone, then it came down, tested the zone, sustained at the zone, then only it was able to move up. Again it came down, sustained at the zone, moved up. Again it came down, sustained at the zone, and then it moved up again on Friday. So as long as S&P 500 is getting support at this the zone, there is no fear there will not be any fall, or any breach of the zone will be recoverable, just like on January 2nd. And in my midday update on the same day to my Patreon community members, I mentioned that there may come a breach, but if the breach is limited to a particular level, then S&P 500 will be in a condition to recover the zone, this zone. And in the same day pre-market update, I have also mentioned that because the S&P 500 closed above the zone at 5868.56 on Thursday, this is why this simply indicates that the SP 500 is trying to not to lose or not to give up, and it simply wants to sustain. This is why a closing below the zone will be fatal for the market, for the entire market, and this can bring down the entire market heavily to 57xx or even to 56xx in a very short period of time. And on December 31st also, I have mentioned that any fall, or the bearish side is open up to the zone, any fall is expected to be handled in the bearish side at this zone. And exactly the same thing on December 30th also. So what I am trying to show here is that this particular zone again and again on December 30th, on 31st, on Thursday 2nd of January, before that on 18th of December, on 19th of December, on 20th of December, again and again the zone proved itself. S&P 500 sustained. This means that as long as the S&P 500 is sustaining at the zone, it has chances for the revival, and it can revive. But a failure, a closing below the zone will be fatal, and then 57xx, 56xx come into the picture in a very short period of time, like within a week or within 2 weeks. Anyways guys, whatever is going to happen in the next week, the bullish movement, the bullish revival, or the failure of the zone, everything I will discuss in detail in this S&P 500 technical analysis. So guys, before I discuss the agenda of this S&P 500 weekly technical analysis, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, through the agenda of this S&P 500 weekly technical analysis, let me tell you that what I am going to cover and how I am going to cover. So first point of the agenda is the S&P 500 technical analysis on the weekly chart. So now for the very first time on the weekly chart, S&P 500 has come into the neutral condition. So this is the primary sign of weakening. This means that if the situation does not improve in the next week, especially in the next week, the week of January 6th, in that case, we can anticipate more fall or good fall in the market. Okay, not just for the next week, but for the entire month or so. Now, but I am not saying that this will trigger the correction. No, for the correction, there are some other conditions that must be fulfilled. Okay, but yes, this can bring down the market at least by 5% or so. Okay. Now, second point of the agenda is the S&P 500 technical analysis on the daily chart. On the daily chart, S&P 500 is now clearly bearish. It is not absolute bearish, it is clearly bearish. Absolute bearish is the Dow Jones. Okay, Dow Jones is absolute bearish. That is why the market is facing a struggle when it is trying to move up. However, in case of the S&P 500, there is a little hope because of the good bullish candle on Friday. Okay, that now if on Monday and Tuesday, only 2 days, on Monday and Tuesday, if the S&P 500 manages to clear the cluster of the moving averages and my heavy resistance level, in that case, definitely it will try for 6,000 in next 2 or 3 days. So daily chart, it is bearish, but still in a position, still in a condition to revive. The third and the last point of the agenda is the probable movement of the SP500 from January 6th, which is Monday, through January 10th, that will be Friday. So just like in my previous S&P 500 weekly technical analysis, I mentioned 593X. Okay, there is my heavy resistance level. If especially if on Monday there comes a green candle or a good green candle, then this bullish slip will remain in the picture and then there will be more bullish movement, back to back bullish candles. However, if there comes any red candle or a little green candle, then most likely it will go for a bearish crossover. Similar to the previous week, okay, or the other weeks, I will tell you that what is going to happen in the S&P 500, in the Dow Jones, in a manner in the entire market in the next week, how that will happen and why that will happen. Okay, so guys, you need to understand that all of these three sections are interrelated, are interconnected. Okay, I covered 30 to 40% of the probable movement in the first and the second point of the agenda, and the rest of the 60 to 70% of the probable movement in the point number 3. That is why it is highly recommended that you should watch all of the three sections in order to understand what is going to happen in the market, in the US stock market, S&P 500, Dow Jones, Nasdaq, etc. in the coming week. So guys, now before I discuss the weekly chart, let me add a small disclaimer to this S&P 500 weekly technical analysis, that I derive the bearish or the bullish movement based on my support and resistance levels, the technical indicators, etc. And I do not speculate. And the movement I derive and the movement I gave, it is more than 80% to 90% accurate, especially through these daily precise updates of the S&P 500, which I give to my Patreon community members every day from Monday through Friday. However, I do not give specific or explicit trade setups to buy or sell at a particular level or at a particular price point. And also, I do not know your trading style, your trading knowledge, your technical knowledge. That is why whether you are seeing 50% profits within a day or within a week, or you are seeing 10-20% losses within a day or within a week, these profit and losses are all yours. Now guys, I am going to discuss the first point of the agenda here. and this is the weekly chart, and I will do the technical analysis on the weekly chart. So weekly chart means one candle represents 1 week, not 1 day or 1 hour. Okay, so there is a beautiful candle in the S&P 500, but there is a bad candle in the Dow Jones. Okay, so now before I discuss the candle, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So now let's discuss the candle of the S&P 500. So what you see here is that once again, as I mentioned in the last week also, closing above the red moving average and the blue moving average. Okay, on Friday S&P 500 managed to close above the red moving average once again. Okay, and because of this closing above the red moving average, number one, closing of the red moving average, it has bullish sentiments, it has capability to revive. And number two is that this candle is heavy bullish in nature. Why this candle is heavy bullish in nature? If you see the shape of the candle, okay, it's a bullish cusp, okay, or you can see a bullish hammer, bullish cusp or a bullish hammer, which indicates bullish movement, okay, or the bullish sentiments. Other than that, it is a special candle formed after a green candle and a heavy bearish candle. That is why again the bullish sentiments. This means that on Monday, irrespective of any open, either initial bullish movement or intraday bullish movement with a probability of a gap up open, on Monday. Now let's analyze the weekly candle of the Dow Jones. Now if you notice, this candle is not a bullish cusp, no, but it is, yes, it is a hammer. It is a bearish hammer, not a bullish hammer, just a bullish hammer like S&P 500. It is bearish hammer. Okay, that is one. Number two. Number three. This candle now finally managed to close below the red as well as the green candle, which the Dow Jones was avoiding until last week. Okay, and last week also I have shown you this, the entire cycle, that it's been many months, like 6 months or more than 6 months, we have not seen this kind of closing. Okay, but now it is there. Now it is just opposite to the S&P 500. However, it is not indicating any gap down open, so that is a point of relief. That is good thing. It is not indicating a gap down open. However, it does indicate an initial or intraday bearish movement. Means there will be some struggle and then initially or intraday, okay, it will come down. Means intraday bearish movement. Okay, I'm not saying that it will fall and there will be a crash. No, I'm not saying that. I'm simply saying either an initial bearish movement or intraday bearish movement. Overall, combining the weekly candles of the S&P 500 and the Dow Jones, okay, what we can expect here is that in the coming week there may or may not come a gap up open, because Dow Jones is not in a condition. Dow Jones is actually giving this the bearish signal. But irrespective of anything, intraday, either initially or intraday, we can expect that the market will sustain. Even if there comes a fall, then intraday it will be in a position to revive. However, whether there will be a fall or not, it will be defined by explicitly by 593x heavy support level, which was acting as the resistance level. If it sustains above this, the heavy support level, then irrespective of anything, it will go green, it will trade bullish. Okay, if it closes below 593x or keeps on sustaining below 593x, in that case definitely there will be a fall. Even if the S&P 500 revives intraday, then also there will be a fall if it trades below 593x. Now let's talk about the technicals. In terms of the technicals, if you notice, Bollinger Bands bullish, S&P 500 is bullish through the Bollinger Bands on the weekly chart. S&P 500 is neutral. I will say neutral through the moving averages on the weekly chart. S&P 500 is bullish through the Ichimoku cloud on the weekly chart. S&P 500 MACD. Okay, now you see MACD. Okay, MACD is bearish. S&P 500 is bearish through MACD. S&P 500 is bearish through the stochastic RSI, and also the stochastic RSI is at the junction, is at the level where we can say that there are chances, good chances, not absolute chances, but good chances, if the S&P 500 goes red in the next week on the weekly chart. I'm talking about the weekly chart, not Monday, Tuesday. I'm talking about the weekly chart, means the closing on Friday. Okay, open on Monday and closing on Friday. If it goes red, then the K channel can hit, or K channel may hit the saturation in the bearish side. This saturation in the bearish side will actually be helpful for the S&P 500, because this will be a because this will then put the S&P 500 in a technical compulsion to give at least one good green bullish candle on the weekly basis. Okay, so whether it will hit this the absolute saturation or not, and if you are my Patreon community member, then as early as on Monday and Tuesday, whenever it trades below the closing price 594247, okay, I will tell you whether it has hit the absolute saturation or not. Okay, but now one thing is clear. Okay, very much clear. See, so what we can see here is that the S&P 500 is neutral. It is neutral on the weekly chart, but still in the bull side. It is still in the bullish trend, but now neutral. It is not absolute bullish as it used to be. It is neutral but bullish. Okay, so this means that no bearish on the weekly chart. If that is the case, then why the market is under pressure? So you need to understand that the MACD is bearish and the stochastic RSI is bearish. And if you have subscribed to my YouTube channel for last many months or years, then again and again I have repeated this principle, that if both of these are bearish, especially on the weekly chart, MACD and the stochastic RSI, then this will bring pressure on the market, because this is what we consider as the momentum in the market, and this is the bearish momentum. Okay, this means that it will have to struggle when it will try to move up. However, it will remain susceptible for any fall. It will remain susceptible for any fall or for any kind of fall, and it needs no help if it want to come down, because the MACD and the stochastic RSI are bearish on the weekly chart. But the principle of 593x will work as is, irrespective of anything. And in the coming week, this red moving average is expected to be around 593x, heavy resistance level, which, okay, as of now it will be seen as the support level, will act as heavy support level. Okay, so 593x will define whether the market will go green or will go red on the weekly basis. So now let's discuss the Dow Jones. Now Dow Jones is bearish through the Bollinger Bands, is neutral through the moving averages, and I will not say that it is neutral but bullish. No, it is simply neutral. Okay, S&P 500 was neutral through the moving averages but bullish, but it is not. Other than that, Dow Jones is bullish through the Ichimoku cloud. The MACD is bearish, and the stochastic RSI is again in the same condition, but it has not hit the K equal to 0. However, it is very close to hit the K equal to 0. Means if there comes a red candle is must. If Dow Jones has to hit the K equal to 0, then a red candle is must on the weekly basis. Only when there comes a red candle, then only there will be a very heavy probability, heavy chances that it will hit K equal to 0. But whether in actual it has hit the K equal to 0 or not, see, I am skeptical on this point because of this green candle. If there would not have been this green candle, okay, in the last week, then definitely this time Dow Jones would have hit the K equal to 0. Okay, but because of this green candle, it is I'm not 100% confirming that if it trades red, then it will hit K equal to 0. So you need to understand that the calculation of the stochastic RSI, okay, it is a little complex. That is why it is not that easy to calculate whether that at this particular price, okay, it will hit the K equal to 0 or not. So we need to wait at least until Monday to see if Dow Jones trades below 42,732, that is the closing price, okay, of the last week. If it trades below, then whether it will hit K equal to 0 or not. Because if it hits the K equal to 0 and also the S&P 500 hits the K equal to 0, definitely the indices will be in technical compulsion to give or to get a bullish reversal as early as, okay, on Monday itself, right? So if you are my Patreon community member and once it trades below this the previous closing price, then I will confirm whether it is hitting the K equal to 0 or not. Okay, once again the same thing, MACD is bearish, stochastic RSI is bearish, the momentum, okay, the pressure is there on the market, right? So what we can here, okay, in case of the Dow Jones, what we can see here, the Dow Jones is more negative or bearish. S&P 500, what we have seen, that S&P 500 is 50-50, okay, neutral but bullish. So next week will be very decisive, okay, and the next week will tell us whether the market is now going, whether the market has any chances to change the trend from neutral to bearish or not, or if there will be any revival. But whatever will happen or whatever is going to happen, I will keep you posted through these daily precise updates of the S&P 500 and the Dow Jones. So guys, if you also want to get these daily precise updates of the S&P 500 and the Dow Jones every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So now guys, I'm going to discuss the daily chart. But before I discuss the daily chart, I have this important information to share with you, that these are the programs that I offer. These are 8 hacks and the modified technical indicators. When I say hacks or 8 hacks, these are the premium hacks or the hidden hacks that you might not have seen or heard of. That is why the accuracy is almost 100% and these hacks works 100%, almost 100% of the times, okay? And these hacks works instantly. When I say instantly, I mean that you will be able to predict whether there will be a gap up open, 100% gap up open, or 100% gap down open, or if there will be a green candle next day 100%, or if there will be a red candle next day 100%, or if there will be a 5%, 4 to 5% fall in a very short period of time, or 4 to 5% rise in a very short period of time. Also intraday you can predict, okay, on the hourly basis, 4 hourly basis, whether within the next hour or within next 4 hours there will be a bullish movement or there will be a bearish movement. Bullish movement to what, bearish movement to what. And other than that, these are the options, these are the trading strategies and the premium calculator. You can trade in the options confidently, you can use the trading strategies, and you can use the premium calculator to calculate the option price, okay, current price, past price, future price of any option, of any strike within 30 seconds, okay, and you can make changes to your trades accordingly, okay, as per these the calculations. And this particular program is the combination of these two programs. So if you want to learn 8 hacks, modified technical indicators, and also the options, trading strategies, premium calculator, then you can participate in this particular program. So guys, you can open these programs, you can click on these programs, you can open these programs to learn more about what I'm going to deliver and how it will be delivered, the number of sessions, okay, and my commitment, okay, etc., etc. So whenever you want to participate in these programs, then I have given the link in the description of the video and also in the comment section to my Patreon page. And when you visit my Patreon page, then you will see the shop option. And under the shop option, you will find all of these the program listed here. Now guys, I am going to discuss the second point of the agenda. And the second point of the agenda is the S&P 500 technical analysis on the daily chart. And this is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one day. Now let's first analyze the candle. And now if you notice this last candle, it's a heavy bullish candle, number one. It's a heavy bullish candle, okay, indicating bullish sentiments. Number 2, the closing of the candle. The closing of the candle is our 593x, my heavy resistance level, which is now acting as support. Okay, because the closing was above this, the level means more bullish sentiments. Okay, but at the same time, the closing of the candle is below the moving averages, the cluster of the moving averages. Okay, and this is indicating some bearishness. All of this indicates that irrespective of any open on Monday, there will be an initial or intraday bullish movement. Initial or intraday bullish movement to what? To the cluster of the moving averages. Simple, at least. So initial or intraday bullish movement means the movement to the cluster of the moving averages. Simple. Okay. However, but yes, it does not confirm any gap up open or gap down open. No. The gap up open was confirmed only through the weekly candle, not through the daily candle. So Monday market has chances. S&P 500 has very good chances to breach the cluster of the moving averages and to trade above, so that it can try for more bullish movement. Okay, more bullish movement to what? To 6,000 or beyond. Okay. Now the last candle of the Dow Jones. This is the Dow Jones. And those who are new to my channel, okay, let me tell you that why I always include the Dow Jones. Because many a times S&P 500, if I analyze the S&P 500 only, then it can give false results. Okay, but when I analyze the Dow Jones along with the S&P 500, then the results are very accurate. That is why I have gained an accuracy of more than 80 to 90% through these daily precise updates when I give these to my Patreon community members every day. So now the candle of the Dow Jones. This is the last candle. Okay, it's simply a bullish candle, okay, or a good bullish candle. That's it, nothing else. So there is nothing specific about this. The bullish candle, it closed below all of the moving averages. Okay, there's no defined shape, nothing. So it is indicating that at the time of closing on Friday, there was some bullish sentiment. There were some bullish sentiments. That's it, nothing else. Okay, so what it means? This simply means that on Monday, Dow Jones may try to move up. Move up to what? Move up to this, the red moving average. That's it. Okay, because when the Dow Jones will try to move up to this, the red moving average, at the same time, S&P 500 will be struggling to clear these, the moving averages. Okay, if the S&P 500 clears the cluster of the moving averages, then the Dow Jones will clear the red moving average, and then it will be heading to around here. And this means that there will be somewhere around 1% movement we can anticipate, around 1% movement in the entire market. Okay, that may not be good for the Dow Jones because Dow Jones is already absolute bearish, but that will definitely be good for the S&P 500. Definitely, it will be. Okay. So now the candles are clear. Let's talk about the technicals. So in terms of the Dow Jones is absolute bearish. Okay, but for the S&P 500 there is something good. So yes, before I discuss the technicals, guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon and hit like if you have liked this video so far. And if you are looking, and if you also want to get these daily precise updates of the S&P 500 every day from Monday through Friday, pre-market update, midday update, final update, and everything, then you can also join my Patreon community. I have given the link in the description of the video and also in the comment section. Now comes the technicals. In terms of the technicals, S&P 500 is bearish through the Bollinger Bands. S&P 500 is bearish through the moving averages. S&P 500 is bullish through the Ichimoku cloud. And I'm talking about the daily chart, okay? And S&P 500 is bearish through the MACD. S&P 500 managed or is a little bullish through the stochastic RSI because there was because the K channel moved above the D channel, okay, on the daily chart. So overall, okay, what we can see here is that the S&P 500 is around 80% bearish. There is nothing neutral. It is simply bearish. 80% bearish on the daily chart. Dow Jones. Dow Jones is bearish through the Ichimoku cloud, bearish through the Bollinger Bands, bearish through the moving averages, and bearish through the MACD, a little bullish through the stochastic RSI. Okay, fine. This means that the Dow Jones is 90% bearish on the daily chart. Okay, Dow Jones is 90% bearish, S&P 500 is 80% bearish. This means that any bullish movement will face trouble. It will struggle. It will be whenever it try to move up S&P 500 or the Dow Jones, then these the indices will struggle and eventually will come down. However, the weekly chart of the S&P 500 is in a position to help the S&P 500 to revive. But for the revival, at first S&P 500 on the daily chart has to clear the cluster of the moving averages. That is the primary thing. Okay, and also when it clears the cluster of the moving averages, it will also be able to clear my heavy resistance level, okay, which was keeping it bearish for some time. That is why I am saying that once it moves above the cluster of the moving averages, then it will be in a position to revive, to survive to 6,000 and beyond. However, a movement beyond 6,000, okay, is not possible as such, because there is also a trend line. So any bullish movement will be up to the trend line, simple. Okay, so I will discuss this in the next point of the agenda. But guys, whatever is going to happen or whatever will happen, I will keep you posted. I will keep you updated through these daily precise updates every day from Monday through Friday, through the pre-market update before the open of the stock market, through the midday update after 3 hours, and the final update before the closing of the stock market. I will tell you whether it is moving up, whether it will come down, what will be the support and resistance levels, zones, etc. Each and everything in a very precise manner if you are my Patreon community member. And if you are not, then you can join my Patreon community. And also let me tell you that other than these, the daily precise updates of the S&P 500 every day from Monday through Friday, I also give these the stock market opportunities in the premium stocks of the US stock market, top 20, top 30 companies of the US stock market, means the blue chips of the US stock market, minimum 5 to 10 opportunities every week. And this is not all, because I also gave the mid-week update analysis. This is a video technical analysis. If you have subscribed to my YouTube channel for last many months or years, okay, then this is very important. Okay, this video technical analysis, because last week also, okay, in this the midweek update on January 2nd, before the open of the stock market, for 5 hours before that, okay, I mentioned the 593x. If S&P 500 on Thursday manages to clear the 593x, to close above the 593x, then it will be moving to 596x, which is the next resistance. And after 596x, it will come to 6,000. Okay, but if it remains below 593x, then the zone will come into the picture. The zone will be there, and the zone will handle any kind of fall. So guys, whenever you want to join my Patreon community, then I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here on my Patreon profile, you will see that there are 3 tiers, or there are 3 levels. So this one is all midweek update videos. Okay, so just like I have shown you the midweek update, okay, a detailed video technical analysis generally published on every Wednesday, mid of the week, okay, and tells you what is going to happen on Wednesday, Thursday and Friday. Okay, midweek update. So this one is daily S&P 500 updates for non-US Canada residents. This one is daily S&P 500 updates for US Canada residents only. So the only difference between these two is the geographical location. So whenever you subscribe to either of these two, then you will be getting all midweek update videos. Means whatever you will get here, you will by default get in this level, in this tier. And also the daily S&P 500 analysis. updates, movement, levels and zones and everything. And also the stock market opportunities minimum 5 to 10 every week. And guys, if you notice, many people have joined my Patreon community for last many weeks, months and years, and they are getting these daily precise updates of the S&P 500 every day from Monday through Friday, and they are very well aware of what is happening, what is going to happen, why that is happening, and each and everything. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500 for the next week. Probable movement means I will tell you that what will be the condition for the bullish movement, and if there will be any bullish movement, then to what level. What will be the conditions for the bearish movement, and if there will be any bearish movement, then to what level. So now for the next week, on Wednesday, FOMC minutes of the meetings will be released, okay, in the afternoon, and the market will react to the minutes of the meetings. And whether there will be a bullish movement or the bearish movement as per the FOMC minutes of the meetings, okay. I will give you the updates to my Patreon community member, okay, when the minutes of the meetings are released, okay. Now, other than that, then comes Thursday, there is nothing. Friday is very, very important. Why it is very important? Because on Friday, the non-farm payroll data and also the unemployment data will be released. And this data will tell us the condition of the labor market. If the labor market indicates that there is more firing also, okay, and people are losing jobs, okay, and labor market is not as strong as it used to be, then definitely it will go in favor of the stock market. But now, after the recent press conference of the Federal Reserve Chairman, okay, this the condition, the weakening of the labor market, although it will go in favor of the stock market or the Wall Street, but at the same time the Wall Street may react negative, because weakening in the labor market means people are losing jobs, unemployment, okay, rate is increasing, okay, or so. This indicates that the correction is expected to come into the picture earlier than anticipated, okay. Anyways, so let the data publish, and once the data is published before the open of the market, then I will through the pre-market update, okay, I will tell you whether the market will react positive or negative, and what will the support levels and these the things, okay. These two things are there. Monday will be crucial, as I mentioned, because Monday S&P 500 will have to clear the cluster of the moving averages. If it fails on Monday, but still it gives a bullish candle, a green candle, in that case it will get one more day, that will be Tuesday, okay. January 9th is holiday, okay, so market will close on Thursday and then it will open on Friday. So again, it will be a short week, just like the previous week. So Monday and this thing. Now, the thing is that if the S&P 500 try to move up, then it will try to move up to what? In that case, if it try to move up, it clears the moving averages, it clears my heavy resistance level at 596x, then definitely it will be heading to 6,000 or beyond. But 6,000 or beyond where? To this particular trend line. This is a trend line, okay. Although some people, okay, will be doing it this way, okay, that way, but this will be the trend line. However, the most important part is that the around 602x is my heavy resistance zone. So any bullish movement after 596x, after conquering, after gaining the 596x, will be limited to the heavy resistance zone, which is around 602x, okay. And because trend line is also there, this means that there will be a very heavy chances, very heavy probability, heavy chances that the S&P 500 can fail from here, okay. But now, a failure from here, a failure from this the trend line, what does that mean? means that this time it will be able to clear. There will be heavy probability that this time it will be able to clear the heavy resistance zone, sorry, heavy support zone. This support zone is the same that is helping the market for last many weeks or months. Okay, so this zone, so there will be very heavy probability that when it get rejected from this, the trend line and my heavy resistance zone, then it will be coming down to the zone, okay, to this the support zone, and then very good chances that it will fail, means it will lose the zone. Why it will lose the zone? Because when it comes down this the zone, then you can notice the Ichimoku cloud, okay, it is there. And when it comes down the zone, then definitely, then for sure it would have already lost the Ichimoku cloud. And see, for now it managed to sustain at the zone, okay, because it was also getting the support of the Ichimoku cloud. But now when it comes down after the failure from this trend line in this manner, then at first it will lose the support of the Ichimoku cloud, and then it will enter into the zone, and then the support will provide, see, the zone will provide the support, but its support will be for some, like for 4 hours or for at least for one day. That's it, not more than that. For a few hours to one day, but not more than that. If the S&P 500 remains around the zone, okay, on the closing basis, then definitely the next day, okay, very heavy probability that it will that eventually it will lose the zone. Okay, now lose the zone means more bearish movement. So before I discuss this the bearish movement, let's discuss one more condition here. If the S&P 500 moves up, okay, remains around this the resistance zone, and as well as this the trend line, at the same time the Dow Jones is trading and sustaining above 42,975. This is my calculated level. If it is trading and sustaining above 42,975, then S&P 500 will get one chance. One chance to what? One chance to clear the trend line and to close above the trend line. Okay, but this time we will wait for the two consecutive closings above the trend line. And when the two closings above the trend line are seen, then it will be seen as a trend line breakout. Trend line breakout in the bullish direction. This means that this time it will be moving to 6,100, which was the all-time high, and also it will be having potential to breach and to move beyond 6,100. Very heavy bullish movement will be there. Okay, but for that bullish movement to happen or to be seen, there must come a trend line breakout condition, and it must also get the support from the Dow Jones. Okay, because if there comes a good bullish movement in the S&P 500, okay, means there comes these two closings above the trend line in the S&P 500. S&P 500 is now in 100% bullish breakout condition. At the same time, Dow Jones is struggling in the Ichimoku cloud. This means that maximum S&P 500 can move up to 6,100. It may or may not hit 6,100, but because before that the Dow Jones can again come into this cycle. Okay, it can come down. Means it will be moving up in this manner, and then eventually it will come down. Okay, in this manner. This means that for the movement to or beyond 6,100 to happen, Dow Jones must clear the Ichimoku cloud, this particular Ichimoku cloud, and also there is a heavy resistance when it moves up to clear the Ichimoku cloud. It clears the 43,006xx, that resistance, then S&P 500 will be around 6,100 or even a little beyond 6,100. Okay, so that is why I always analyze the Dow Jones along with the S&P 500. Otherwise, there will be false results. Okay, so Dow Jones and this thing in the bullish side. Now comes the bearish side. Bearish side is now very simple because the trend is already bearish. Okay, 80% bearish S&P 500 on the daily chart. Dow Jones is 90% bearish on the daily chart. But guys, yes, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you have liked this video so far, then hit like. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, okay, with heavy accuracy of more than 80 to 90%, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, if you want to learn these the hacks, the premium and the hidden hacks, which works with almost 100% accuracy and almost 100% of the times, then you can participate in these the programs. Okay, this program is the combination of this program and this program, and you can learn the premium hacks, modified technical indicators, trading strategies, premium calculator, and you can become self-reliant. So I've given the link to this program in the description of the video and also in the comment section, and you will find these programs in the shop section on my Patreon page. Now, for the bearish movement to happen, number one, it should, if the S&P 500 struggles in the moving averages, at the same time the Dow Jones is struggling to sustain at 42,975, okay, and the S&P 500 is struggling to sustain at 596x, because 596x is already there in the moving average, okay, 42,975 in the Dow Jones, okay. So these two at the same time, okay, at the same time, not at the different time, same time, okay. If it happens, and if the S&P 500 and Dow Jones fails in this manner, in that case definitely there will be a reversal from here itself, okay, there won't be any more bullish movement. However, because of the closing, because of this particular closing on this particular closing, that was 5942.47, which was our 593x on Friday, the S&P 500 is in a position to try for 596x, okay. This means that S&P 500 has the reasons to try, to struggle and to clear, okay. Even with this the struggle, okay, it has the potential to clear the cluster of the moving averages. And if the Dow Jones also clears the 42,975, moves above, sustains above, okay, and also closes above, then definitely S&P 500 will be in a position to try for the trend line. Trend line is what? Trend line is around my strong resistance zone, okay. Now, second failure, okay, that was the first failure at the moving averages, okay, 596x in the S&P 500 and 42,975 in the Dow Jones, okay. This will be the first trigger. This will be the second trigger, okay. Second trigger means that trend line which is at 602x. My heavy resistance zone is at 602x, okay. Trend line is also at 602x. So there is a very high probability, very heavy probability, because the MACD is bearish on the weekly chart, stochastic RSI is bearish on the weekly chart, and the MACD is bearish, stochastic RSI, MACD is bearish, and the MACD is bearish for the S&P 500, MACD is bearish for the Dow Jones on the daily chart also, okay. That is why the bearish pressure. So this is the point, okay, this is the point from where we can anticipate a fall. The chances of a fall from here are heavy. This the trend line, okay, or from here are very heavy, okay. If the S&P 500 struggles and moves to the trend line, okay, after 3 or 4 days, then this zone will not come into the picture. Then a level 600x will come into the picture, okay. In that case, it will fail from the level, the S&P 500. Monday and Tuesday, this one 602x. After Tuesday, 600x. Okay, simple. Very heavy chances of failure. So this is first trigger, second trigger. Third trigger is not in the S&P 500. Third trigger is in the Dow Jones. And that third trigger is the moving averages and the boundary of the Ichimoku cloud here, okay, which is around I guess 1.20, 1.4% or so, okay. So this means that the S&P 500, even if it managed to sustain at or around that trend line or try to move up and comes into the bullish breakout condition. Okay, but the Dow Jones is struggling here. In that case, S&P 500 won't be able to take advantage of the bullish breakout condition. Its upward movement will be limited to the heavy resistance level 604x. Just like the previous times, it will fail from 604x. Okay, these are the points of failure. Fine, these are the points of failure, but what level it can fail? Any failure for now in the S&P 500 will be up to the zone itself. Any failure in the S&P 500, but now this time the zone will not be in a condition to help the S&P 500 to revive and to sustain, because it will be coming down in this cycle like this, up down and then up down in this manner. Okay, and this is the natural bearish cycle. In this manner it will be coming down. It will also lose the support of the Shimoku cloud. It will come down to the zone for a few hours to at most 1 day. The zone can handle. The zone has the potential to handle, not a problem. Okay, but more than that, no. If the S&P 500 sustains around the zone, inside the zone, or the worst case scenario, if it closes below the zone, closing is very important. If it closes below the zone, then definitely, okay, highly likely, like I can say 90 to 100% chances it will fail, and then it will enter into 57xx, and 57xx it won't be able to hold for long. There will be more fall, and then eventually it will enter into 56xx. Okay, however, 57xx may come into the picture if it fails from here, from the cluster of the moving averages, from 596x. If it fails, then 57xx can come into the picture, but 56xx cannot. Okay, it is not in that condition that the S&P 500 can give up to 56xx. Okay, so the bearish side is very simple. Okay, this is the natural cycle. Okay, down, up, and then failure, and then down. Only and only a bullish breakout condition can help the S&P 500. Okay, otherwise nothing. Okay, this will the bullish, this will the bearish side. But guys, whatever is going to happen, whatever will happen, I will keep you posted. I will keep you updated every day from Monday through Friday, every day through these daily precise updates if you are my Patreon community member. And if you are not, then I have given the link in the description of the video and also in the comment section. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And please hit like if you have liked this video. And if you have any questions that you want to ask, then please feel free to ask your questions through the comment section. So guys, this was my S&P 500 weekly technical analysis for the week of January 6th. Means from January 6th, which is Monday, to January 10th, that will be Friday.